Welcome back. In video 12, we are going to discuss how to prepare closing entries. Closing entries zeroes all revenues and expense accounts in order to measure net income or loss for the fiscal period. They are prepared at the end of the company's fiscal period and include the use of an additional temporary account income summary to summarize net income or loss for the period. They also prepare the accounts for the next period. Let's talk about the difference between temporary versus permanent accounts. Temporary or nominal accounts, such as revenue, expense, and withdrawals, are closed out at the end of the period. During the closing process, another temporary account income summary is used and also closed out at the end of the process. Permanent or real account, on the other hand, such as asset, liabilities, and owner's capital account, are not closed at the end of the period. Instead, balances are carried forward to the next period. There are 4 required closing entries. Step 1, close revenue account to income summary. This entry transfers total revenue to the credit side of the income summary account. Step 2, close expense accounts to income summary. This entry transfers total expense to the debit side of income summary. Step 3, close income summary to owner's capital account. This entry transfers net income or net loss to the owner's capital account. Step 4, close owner's withdrawal to owner's capital account. This entry transfers withdrawals to the debit side, thereby reducing owner's capital account. Okay, let's see how this process works. Here's the adjusted trial balance for Minelli Landscape Design at the end of November. We're going to assume that this is also their fiscal year end. Okay, step 1, we're going to close design fees account. So there's only one revenue account with a balance of 4,700 credit. So the closing entry for step 1 then would be debit design fees, the revenue account, 4,700, and credit income summary, 4,700. Using T accounts, the balance for design fee and income summary is shown. As we can see, income summary now has a credit amount entered of 4,700, and design fee now has a 0 balance. Again, looking at the adjusted trial balance at the end of November, we see highlighted the balances of the expense account that will be closed. Office supplies has a debit balance of $350. Depreciation expense, a debit balance of $119.05. Insurance expense, a debit balance of $37.50. Salaries and wages, $1,500. Rent expense, $850. And utility expense, a debit of $100. So let's take a look at the closing entry for expense. As you can see, each one of the expense account is credited for its ending balance, and the total of all expenses is debited to income summary. In this case, the total is $2,956.55. This transfers all expenses to the debit or the left side of income summary. Using T accounts, you can see here each one of the expense account. We can see each one of these accounts now has a 0 balance. And now in income summary, we have an entry on the debit side representing total expenses and an entry on the right hand side representing revenues. So the net balance in income summary at this point is $1,743.45. This number represents net income. As you can see, the revenue side is larger than the expense side, therefore we have net income. Here's the entry to close the income summary balance, which we just discussed. We are going to debit income summary for $1,743.45 and credit Minelli Capital for $1,743.45. This credit will be adding net income to the capital account. As you can see from these T accounts, Minelli capital has now increased from $25,000 to $26,743.45, and income summary has now become 0. Finally, step 4, we're going to close withdrawal to Minelli capital. As you can see from the adjusted trial balance, there is a debit balance of $1,500 in the withdrawal account. The closing entry to close withdrawal is to debit Minelli capital to decrease the capital account and credit Minelli withdrawal $1,500 to zero out that account. Again, looking at the T account, we can see Minelli withdrawal account is now 0 and Minelli capital has decreased from the previous balance of $26,743.45 to $25,243.45. Notice that this amount agrees with the balance reported for Minelli capital on the balance sheet. Okay, that's it. Thank you for watching this video. Once the closing entries are journalized and posted to the general ledger, the final step in the accounting cycle is to prepare a post-closing trial balance. To learn how to prepare the post-closing trial balance, go to video 13.